going on, everybody, and welcome back to Make Your Own Luck Mondays. And again, this is a web series that I do here on YouTube where I take topics on personal finance, wealth creation, and investing and just try to break them down and make them as simple as possible to understand. So today we are going to talk about index funds. What the is an index fund? So it's interesting when I talk to people about my videos and what I'm doing here and everything. A lot of people are super hyped on some of the stock videos that I do. So it's like, hey, I loved when you walked through how to purchase, a stock on E-Trade, a single stock, and this and that. But a lot of times people will bring up, hey, like you always talk about investing into low-cost index funds or put your money into, the S&P 500 and just kind of let it do its thing. And I've never really broke that down and explained that for people. So I figured today I would talk a little bit about what that means and just kind of make it simple and really easy to understand as far as what index funds are, how they work, and basically why 99% of people do it, as well as fund managers and all those different things. So we will start with talking about what is an index fund. So to understand an index fund, you have to understand the indexes. And there's three we talk about all the time here in the US. We talk about the NASDAQ, we talk about the S&P 500, and we talk about the Dow Jones Industrial Average. So let's use the S&P 500 as an example. Now, the S&P 500 has 500 of the world's best companies, and these are companies like, Apple and Google and Facebook, Johnson & Johnson, Procter & Gamble, Visa, different things like this. And it's, a big portfolio, a big grouping of all these 500 companies. And you basically go in there and you buy a little piece of everything. And what happens is some brokerage firms will weight them out a little different. So they'll, be invested a little bit heavier into Apple than they are Google, or a little bit heavier into Johnson & Johnson versus Procter & Gamble. But over time, they basically all are pretty damn close to averaging out the same returns. And how that differs from what like a mutual fund is, and basically an index fund is it's a type of mutual fund, but it's not actively managed. And what I mean by that is a mutual fund is actively managed by a financial pro or a brokerage firm, and the fees are a lot higher because they're basically hand picking your stocks. They're trying to buy and sell and trying to beat the market. And over time, it doesn't really work like that. 90% of active fund managers do not beat the market average. So that's why index funds have gotten so popular over time. And people like Warren Buffett have done all these, bets with hedge funds and all that to prove that. And I think he did a bet in 2007, I think it was, for $1 million. He bet some hedge funds that they couldn't outperform just the S&P 500 index average over a 10-year period. And he, won that bet, won the $1 million, and a bunch of hedge funds look like idiots. So that being said, that's why everybody always says low-cost index funds are the way to go. And another one that people talk about is ETF versus index fund and what that all means. And they're basically the same thing. An index fund, the price of it happens at the close of every day. And an ETF, you can basically buy and sell that like a normal stock. So you can buy and sell those throughout the trading day and get them at different prices. And an index fund, the price happens at the close of the day and then opens the next day. So that's basically the difference there between an ETF and index fund. So what are some of these index funds and what are their tickers and how much do they cost and how does all that work? So I'll give you a few popular ones, some that I do and some that I know about, and you can check out all different types of brokerage firms to do your research on these. But here are a couple of the big ones out there. Vanguard does an incredible job with index funds. They actually created the index fund in 1975. So there's a couple there that are really good to look at. So stock ticker VOO is their, S&P 500 ETF. So basically that is their index fund for the S&P 500. I think it trades at, what was the last it traded? Right around $319. And you can check that out. And again, it's going to track the S&P 500, and it's a very low cost index fund. I think it's 0.03% or something like that. And Vanguard has another one that's really good as well that does the entire stock market. So the VOO is going to track the S&P 500, so it's going to track 500 stocks within that. But you can do the entire stock market, and that ticker is VTSAX. And that one's a little bit more of a low cost index as well, and the stock price on that is only $86. But take note on the Vanguard stuff, there is a minimum to get into their index funds. You actually need $3,000 just to get into their index funds, and then you can kind of buy and hold and do different things within their indexes. So there is a minimum to get into their index. But there's also another way to look at that too. You can look at just the SPY, and that's what I invest in. I invest in the S&P 500, and it is ticker SPY. And you go on, and that trades at about what did it close at? $347 or something on Friday. So that's, it's a little bit more expensive for sure as far as, buying a single share of that. But you can also look at, there's other ways to get into index funds with using fractional shares and different things. I'm not positive what brokerage firms do that. I use E-Trade. I know the SPY is $347. I buy it every single month, no matter what. So that's kind of how I do it. It is a little bit more expensive as far as the price of it. From an expense ratio point of view, it's 0.09 versus 0.03. At the end of the day, it's not enough money for me to super stress out about. So I just buy the SPY. I do it all the time. I may start purchasing some VTSAX just to have the entire stock portfolio in there. So the next time I go in, I might take a few $1,000 and just get in on the Vanguard train and buy the entire stock market. So that's how it basically works. Index funds and them versus, mutual funds, actively managed versus just kind of following the market and matching the market. And yeah, that's all I got this week for you here on Make Your Own Luck Mondays. Hopefully that helps out. And thank you so much for liking the video, subscribing to the channel. Please share with friends if you know people that have questions. If you have any ideas or thoughts about different things that you want me to talk about, or you're having struggles understanding different topics on personal finance, comment below and I'll do videos on that stuff. No worries. So that's all we got this week. See ya.